Okay, we're out here by the pool today. Now, why are we out by the pool? Well, because we're talking about quality of earnings reports. Got to keep it a little bit exciting. It's not exactly an exciting topic. All right, you're an independent sponsor. You need to get the numbers right. The veracity, the integrity, the quality of the numbers is critical. That is what eventually is all people care about. That's what sells your deal. They got to get the numbers and they got to be right. They have to match up to your fancy financial model that you've prepared, all your projections, and they also need to tie back to the historical financial statements, the historical balance sheet. It all has to tie it together. That's the integrity of the numbers. And it has to be reviewed and signed off by a third-party accounting firm. You have to pay them. You're going to cost some money. Okay, so who do you hire? Our recommendation strongly is to hire a regional accounting firm and spend the money. Don't be cheap. But at the same time, we can help you and advise you to save tens of thousands of dollars. Don't be cheap when you hire a quality of earnings firm. Does not mean hire one of the big four accounting firms or the largest firm you know. We have great relationships with regional accounting firms around the country that can do a fantastic job and will charge you a fair amount, but a fraction of what a big four accounting firm is going to charge. Okay, what do they need to focus on? They need to focus on the basic blocking and tackling of a quality of earnings report. A proof of cash, they need to prove out the revenue, they need to prove the veracity of the revenue, and they need to prove the veracity of the quality of earnings. Then they're going to get to the topics that everyone talks about, which is the adjustments to EBITDA, the adjustments for ownership compensation, excessive ownership compensation if the owners own the building and they're charging excessive amount for rent, owners, family members running expenses through the business. Those are all legitimate adjustments. They should review those. They should review those, and you can have them do that. But the keys are that they can move quickly and do a good, thorough job and get the report that you need. You don't need a 200-page report. You don't need a 100-page report. You just need a good quality report that focuses on that integrity and veracity of the revenue and the earnings that in the period. Another very key point, they need to review the most recent year end and the TTM period. You have to get the TTM period done. It's just essential. So the keys are to review the most recent year end, if possible the last 2 year ends, and the TTM period. The revenue, EBITDA, adjusted EBITDA, and net income for the year end and the TTM period have to be in the report. The proof of cash has to be in the report, and a full review of the accounting and the financial controls and accounting procedures of the company have to be in the report. All right.